Good afternoon and welcome to the Asian Midday Marketwatch. Our guest today is David Koh, founder of the Smart Investor in Singapore. David, as always, lovely to have you on a Friday.
I know, TGIF.
Now, David, before we get your insights, let's take a look at how crypto markets are performing because there's been really some movement, and then look at regional stock markets. We start with Bitcoin, which is at 61,566. It's up 4.73%. Ethereum, however, has been the big mover. It's at 4,357.75. It is up 9.08%, and its market capitalization now is just about half of Bitcoin's. It's 513.86 versus Bitcoin's market capitalization of 1.16 trillion. So just around half of that. But it's amazing that Ethereum has become more and more popular over the last 12 months. But looking now ahead at regional markets, we've got the Nikkei, which is at 28,847. It's up 0.09%. The Shanghai Composite is at 3,523.94. It is up 0.16%. The Hang Seng is in the red. It is at 25,441.42. It's down 0.45%. The ASX 200 is down sharply. It's down 1.45% at 7,323. The Kospi is down 0.63% at 2,990. Closer to home, we've got the Straits Times Index, which is at 3,225.11. It's up 0.66%. Rounding up the numbers, we've got the FBM KLCI on Bursa Malaysia, which is at 1,562.71. It's down 0.26%. David, what's your view on the mixed market performance across the region this morning?
Well, I think there were some results last night that came out from some tech companies. And even though the Dow had a good night last night, I think after hours, there were some disappointments from Apple and also from Starbucks. And as a result of that, I think people are just sort of pausing at the moment. But let's not forget, it's the end of the month. So there'll be lots of people who will be going into the weekend, and they might be taking some money off the table. What is really quite interesting is the KLCI, which I watch quite carefully.
Yes.
And the KLCI, as you quite rightly pointed out, was down a smidgen, down about 0.25%. But the fall would have been a lot worse had it not been for Top Glove. Top Glove was up about 4%, which tells you that this blasted virus is still around at the moment, and that companies that are making personal care products, such as Top Glove, Hartelager, will still probably in demand for a little while.
But Top Glove has been in the news recently for all of the wrong reasons. And obviously, they had some governance issues, there were labor issues. And then in the last 2 months or so, as the Top Glove, the price of Top Glove obviously went up sharply. They had instituted a huge share buyback scheme that hasn't worked out according to plan, because Top Glove shares have obviously corrected quite significantly since the buybacks. So there's a mixed picture there, David. What are your thoughts on that?
Well, there's also the other thing. I mean, the one you missed out on, Brian, which is the elephant in the room, is their listing on the Hong Kong Stock Exchange. They want to list their shares over there as well. So, I mean, they already have a KLCI listing. They have a listing over here in Singapore. And why in heaven's name do they want to go and list in Hong Kong as well? That is the bit that is people are causing people to scratch their heads over. And why buy back shares when you're going to be listing in Hong Kong? I mean, for goodness sake.
Exactly.
I mean, as a shareholder, I'm quite happy with what is going on at the moment. Their dividends were reduced slightly at the last count, which is a little bit disappointing. So if you got all this cash, you're buying back your shares, and then you're going to be floating on the Hong Kong Stock Exchange. None of it seems to sort of make a lot of sense to shareholders. And maybe some shareholders are saying, look, we've had a good run on this company. Let's just cash out and go somewhere else. Maybe that is what is happening. But let's not forget that the reason why I bought Top Glove in the first place wasn't because of the PPE, the personal protection equipment side. It was really because of the clean room gloves that they were producing for all of these high-tech companies out there. That was why I bought it. So I'm going to carry on hanging on to Top Glove, regardless of what the management is going to be doing.
Now, David, you did talk about Apple and Starbucks. Now, on Apple sales missed expectation, and Tim Cook says that supply issues cost the company $6 billion. Could you kind of enlighten us on your thoughts on Apple and Starbucks?
Okay, right. First of all, I mean, you raised a very interesting point, and that is that both Apple and also Starbucks missed analyst expectations. So who missed what? Was it the analyst that got it wrong, or was it the company that got it wrong? I mean, ultimately, the company is there and reported the results, so the analyst got it wrong. I mean, the analysts were out there, and I sometimes, have a chuckle to myself with regard to these analysts who spend an awful lot of time on their spreadsheets, and they come up with figures. And some of these analysts even come up with share prices to 2 decimal place accuracy. I mean, I'm happy if I get 2 significant figures accuracy, let alone 2 decimal place point accuracy. And people seem to think, oh my goodness, the analyst has given a share price of $1.14 or something. And you think, well, 2 decimal places, they must have done a lot of work on it. I mean, I'll be happy if I get round about $1, let alone $1.14. Yeah. So, I mean, that's point number 1. Number 2, you have a look at the Apple and also the Starbucks results, and they weren't really half bad. You look at the revenues at Apple, I mean, that was up 29%, and also the profits at Apple this quarter, 20.5 billion compared to 12.6 billion this time last year.
Isn't that insane numbers? I mean, these are phenomenally good numbers.
Well, exactly. And then you have a look at Starbucks. I mean, revenue was up 31%, and the income at Starbucks was up 300% compared to this time last year. So when you have a look at the overall picture, sure, these companies are doing exceedingly well, but unfortunately, they all have some specific industry problems. And in the case of Apple, chip shortage and also supply chain problems. And in the case of Starbucks, well, if you have a look at the same-store growth for Starbucks in America, that was very strong. Same-store growth in their second biggest market, which was China, that was down 7%. And that was primarily because of the lockdowns going on in China. So they all have specific issues. And I think as we go into the next quarter, we're almost at the tail end of this quarterly result season. As we go into the next quarter, I think there'll be a lot of volatility. Many of these companies will have to sort out their specific problems, such as cost inflation in the case of Starbucks, lockdowns in certain countries, supply chain problems, and also chip shortages. So there'll be lots of problems for investors to try and sort of get their heads around. But ultimately, in 5 years' time, ask me how Starbucks and Apple are going to be doing. I think the answer is probably pretty well.
Now, one thing that's also then taken in investors by surprise is Facebook rebranding itself to Meta. What are your thoughts on that? Why do you think they are doing that? And are you a shareholder? Are you buying into that?
I am not a shareholder of Facebook. I will never own shares in Facebook. And
why is that?
I just don't like the management. I don't like the way the company is structured. And with regards to the name change, Brian, I mean, the only reason why people change names is because they get married, right? So yeah. If you have a merger, it's understandable that you might want to change the name of the company. And the other reason why people change their names is because they have something to hide, something they're ashamed of, right? And so they're hoping that by changing their name, people will forget who they are. If one day I come on your show, Brian, and I call myself, I don't know, Frank Lee or something, it's probably because David Kuo has done something really naughty, and he doesn't want to be, he doesn't want people to be reminded of what David Kuo has done in the past. So in the case of Facebook, do you think that changing the name from Facebook to Meta will actually sort of change the corporate structure, will change the management in any way, will change the way they operate? The answer is probably not. And
okay, but so I'm going to take a different point of view. The next big opportunity right now. So Facebook currently in terms of business has an aging user base.
But people of my generation,
yeah. The new opportunity is the metaverse.
Yeah.
And that's where they're positioning themselves. And it's almost a signal, and this is my opinion, it's a
Yeah.
signal to not only the market, but also their employees. This is the space, this is the next horizon for us. We
Yeah.
need to galvanize ourselves around that. So
Yeah.
I look at this a little bit differently. Yes, they have all their issues, but this is how I look at it. Because I don't think the congressmen are going to be fooled by a name change. They are
Well,
going to go after, and they should go after Facebook for how they have agreed. I completely agree with you about their management,
yeah.
but I think that change to Meta has a underlying strategy reason for it.
Yeah. Well, I tell you what, Brian, I mean, I always adhere to the principle that if you roll a raisin in mud, you end up with mud, right? And so, yeah. And so, as far as Facebook is concerned, I think they need to change something at the very top, because all that will happen is that all the bad practices that they had with Facebook will probably just be translated to this new metaverse that you are talking about. And they need to do something, because otherwise all that will happen is that you roll that raisin in mud and then you'll just end up with mud.
David, as always, thank you very much for taking your time to come on the show.
Thank you.
Now, we've been speaking to David Koh, the founder of the Smart Investor out of Singapore, on Biztech Asian Midday Marketwatch. I'm Brian Fernandez. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.